A fourth-generation entrepreneur from IIT Madras, Vellayan Subbiah has established his credentials for turning around diversified businesses and making new bets on sectors that have the headroom for significant growth. From an AUM of 10,000 crores to 1.5 lakh crores, Vellayan Subbiah is targeting an AUM of 10 lakh crores in the next 10 years for Chola Investment and Finance, India's second-largest NBFC. His ambition is equally audacious for Tube Investments, a diversified engineering company, which has seen a significant rise in its stock price over the last 4 years. And there is more on his plate. Subbiah is foraying into what he sees are white spaces, be it clean mobility, medical consumables, semiconductors, and more. For delivering on growth and creating an impact, Vellayan Subbiah was awarded the EY Entrepreneur of the Year Award for India, and he's now representing the country at the EY World Entrepreneur Awards in Monte Carlo, and he joins us from the event, from the sidelines of the event. Vellayan Subbiah, many thanks for joining us, and once again, congratulations on representing India on the world stage at the EY World Entrepreneur of the Year Awards. Let me start by asking you about your entrepreneurial journey. Fourth-generation entrepreneur from IIT Madras. You've sort of proven your credentials as a bit of a turnaround artist, not just as far as the NBFC is concerned, but even for companies like CG Power. What has been the biggest lesson, the biggest realization as you've taken these companies and scripted a turnaround?
Yeah, Shereen, thanks so much for having me. I think if I take turnaround lessons, fundamentally it comes around to the fact that, when you have organizations that have a lot of people, if you can tap into the real power that all of those people have, align that power, and focus it in a direction and give them focus and tap into the energy that the people have, you can do great things with companies. I think what we've seen in all three turnarounds in terms of CG, TI, and Chola, they've all been stories about people. Most of them have been working with the same people that were with the company even before we took them over, or in some cases before I started as the CEO. So they're all stories of just kind of tapping into the latent talent of people and then getting just what I would call kind of ordinary people to do extraordinary things.
Well, speaking of doing extraordinary things, and I was talking about the audacity of ambition now, Vellayan, so let's start by talking about Chola and the growth trajectory that you've charted for the company. The second largest NBFC today, an ambitious target as far as the assets under management is concerned over the next 10 decades. Largely organic, or do you believe that there could be inorganic opportunities that you would consider?
In Chola, Shereen, I really believe our path is going to be fully organic. Financial services penetration in India is still incredibly low. And for NBFCs like us, like you probably know, we've compounded at about 25% over the last 14 years, per year over the last 14 years. And I genuinely believe that that kind of rate of compounding is possible over the next decade as well, just because of the kinds of opportunities that the country has to offer and the fact that we still see fairly limited amounts of financial services penetration across the country.
Well, given what you say is the low penetration, which implies that there is significant headroom for growth, outline for me what will be the levers that you will continue to exercise in order to improve the performance as far as Chola is concerned. Just in the context of your last set of numbers for Q4 FY24, very robust quarter, your credit cost at an 8-quarter low, your net interest margin at a 4-quarter high, your GNPA ratio at a 13-quarter low. In the near term, the medium term and the long term, lay out the growth map for Chola for us.
Yeah, Shereen, so that's a great question. So when we look at it, obviously you've got four major areas, right? Kind of what yield are you getting on your assets? What are your operating costs? What are your costs of funds? And what are your NPAs, right? Like you said, NPAs are now tending towards a low, but costs of funds have tended towards, being on the more expensive side right now. I do believe that India is at a higher point in its cycle in terms of the interest rates and therefore our cost of funds as well. But what we're seeing is that is being offset by basically being able to generate slightly higher yields. So we've been able to maintain a pre-tax ROA in that range of about 3.5%, I'd say largely over the decade. We tend to oscillate around that. When costs of funds are low, then we tend to be able to push more towards 4. And when costs of funds tend to be higher, or when GNPAs tend to be higher, or when NCL tends to be higher, then we tend to kind of go towards the lower end of that. So I really believe that this is what's going to happen. So when I see our levers, basically it's just focused on the same levers again. As we scale, obviously we get more operating expense leverage. And so I do believe that that number is going to start coming down, which is going to help us a fair bit in terms of expanding our overall pre-tax ROA. And the cost of funds is obviously going to be cyclical. So when that comes back down, kind of that will shift as well. Obviously, the two other areas where we do a lot of work, I mean, a lot on yield, which tends to be kind of looking at our business mix. We've constantly added new businesses and shifted our mix between existing businesses so that we can maintain a healthy yield across our overall portfolio. So when I see vehicle and some of what's happening on the vehicle side get more competitive, we've now got new segments. On our affordable housing side, we're growing significantly. Our loan against property business continues to be very robust. So basically, the business mix is really helping us. We've also got a small amount of unsecured in our book as well, which is performing well for us. So I'd say the business mix is a huge lever. Then obviously there's a lot we're doing around data and what we can do, both in terms of origination, but also in terms of underwriting, and that's helping us with our losses in that portfolio as well. So that's basically helping us a fair bit. So I would say kind of just activities on origination, activities on our underwriting, and then looking at overall mix. Obviously, the growth engine remains robust, and that's where we continue to add branches. Most of the other business units are expanding into the vehicle finance branches today. So our cost of adding branches is also fairly low. So we're close to 2,000 branches now and continue to scale that number as well. So that's the overall mix from a Chola perspective, and I think it's really quite robust as I look at it. I mean, obviously, I do think that there will continue to be cyclicality, but over the medium and long term, I still feel very bullish and very strong about that business.
So that 10 lakh crore rupee AUM target on track?
So like I said, I'm always kind of cautious about forward-looking projections, but I do believe that we can continue to compound at a fairly robust rate, as you've seen we've done over the past decade as well.
Let me move away from Chola and talk to you about what's happening on the tube side. Private capex, and we've started to see that pick up. Of course, we now are waiting for the new government to take shape and form and be sworn in as well. And there are concerns on whether we will continue to see the kind of government spending on capex. So what is the outlook that you have as far as private capex is concerned? Also, the changes in big states like Andhra Pradesh with Chandrababu Naidu coming in there and a focus much more on building on infrastructure. In fact, they were on my show just a moment back talking about rebuilding Amravati. Just a take on what private capex looks like at this point in time and what could that potentially mean from an order book point of view?
Yeah. Honestly, I do believe that people were waiting for this clarity to emerge, and I honestly am very bullish about what's going to happen with the private capex cycle, because I do think that leverage at the private level for most of the larger conglomerates and companies is fairly low right now, and the global opportunity, including the domestic demand, both continue to be very robust, right? So. On most sectors, we continue to see fairly robust domestic demand. The global opportunity with China +1 and all of that continuing to play out, I think, is still very significant. So I really think that private folks, and especially ourselves, we're looking at several areas of growth. On the clean mobility side, we've already put significant capital to work, and we do see a lot of opportunity to deploy more capital on the private capex side. In some of our growth segments. Obviously, CG has its the OSAT and the semiconductor side, which is obviously helped supported by the government as well. So I definitely do see the private capex cycle beginning to pick up, Shereen.
And that's good to hear, Vellayan. But, I want to talk about that capital allocation policy of yours. You do firmly believe on capital efficiency, and you talked about some of those new bets that are playing out for you, whether it's clean mobility or the foray into semiconductors, medical consumables. Which of these do you see potentially as the next big growth engines for you that could potentially change the complexion of the business from where it is today over the next 5 years?
Yeah, so Shereen, two different companies. So if I look at it from the TI perspective, obviously clean mobility, I think, is a bet that I am very, very confident on. We've gone in, and like, we have electric vehicles in 4 different categories, 2 that have already come to market, 2 that will come to market. I honestly believe that India is going to shift to electric at a pace that is higher than any other country in the world, with the exception of China. I do believe that we will be much faster than most of the other countries in the world, because there's real economics in India to drive that shift. And I do believe if we get some government support, which I think will likely come, with new policies being set by the new government, the rate at which the shift will happen will be extremely, extremely high. So that's something that I would say has the potential to transform. When we look at overall manufacturing GDP in the country, which I think is about 14% of India's GDP, I'm not talking about industrial, I'm just talking about manufacturing GDP. One of the biggest contributors to India today has been the vehicle industry, both passenger and commercial. What I do see is that whole segment is basically going to shift to electric, and therefore of manufacturing GDP, I would say that segment basically offers the largest segment for growth. So I do believe that the people who are going to establish themselves as leaders in electric are going to be quite different from the people who have been the incumbents and have been the leaders in an ICE age, right? And so that gives us a huge opportunity to get into a sector that is probably the largest component of manufacturing GDP in the country today, and become a significant player in that segment, which is what our aspiration is to do.
When you talk about your aspiration of being a significant player in the clean mobility, in the electric mobility space, in the next 3 to 5 years, what could that mean, if you can quantify that for us? And you have done acquisitions in this space. Are you likely to do more? What does the launch pipeline look like? You've already, you're in the 3-wheeler space, you're in the commercial vehicle space as well. Outline for me what the next 3 to 5 years will look like when you talk about significant presence in the electric mobility space.
Yeah, so definitely, right now I don't see any more need for acquisitions in that space. So now we've got enough of a base knowledge, and we will develop on it. We might have partnerships, but no more acquisitions is what I believe. So like you said, we've launched a 3-wheeler. We will launch a 55-ton electric truck. What we will also be doing over the next 6 to 9 months is launching a small commercial vehicle, starting with a 3.5-ton GVW, and then looking at different payloads. And then we will also hopefully over the next 12 to 18 months launch our tractor. And I think that both of those products have huge potential in India as well. The small commercial vehicle space sells roughly 30 to 40,000 units a month. And as you know, tractors basically sell close to 900,000 a year. So both are large potential. And I do believe that both those products have a larger propensity to move to electric. And so that's going to be our big bet as far as that one is concerned.
And what kind of capital requirements do you believe you will need to put on the table to take these aspirations forward in the mobility side?
Yeah, so we've already announced publicly that we will basically deploy 3,000 crores towards this effort to start with. We've put in 750 of our own, and we're raising 2,250, most of which is already raised. So we have one more chunk that we will basically complete in the next 3 to 4 months. Against that, what we believe is for the first slew of capital, 3,000 crores will be sufficient. And then we'll see how that performs over time, and then basically see where we need to deploy more. But that's going to be the first slot.
Going back to the statement that you made, that you're very bullish on India's manufacturing story and manufacturing potential. And I know previously you've said that you want to look at white spaces as opportunities that you will focus on. Now, you've entered into a whole bunch of white spaces, so to speak, including what we just spoke of, electric mobility, and of course, medical consumables, etc. Is there anything else on the anvil, potential opportunities that you're considering at this point in time?
We're always looking at different areas, Shereen. So, I think till we actually kind of go through the process of ratifying which area we're going to invest in, we won't basically make any public statements about it. You do know that, from our foray into, the OSAT with Renesas as a JV partner, and with stars, that's going to be a big bet as well. I think the semiconductor industry is really going to mushroom in India. I think there's a lot of potential for it. Just because of the raw horsepower we have in terms of intellectual capacity, almost 20% of the world's semiconductor design engineers are Indian, right? So I do feel like that sector has tremendous potential in India, and it's a sector that I personally am again very, very optimistic about in terms of the opportunities for the country.
I know that you're very optimistic about that sector, and which is why you've decided to foray into it. Give us a status check to where things currently stand as far as the partnership is concerned, and getting things off the ground.
Yeah, so honestly, the government has been very, very fast with all of its approvals. We've just started the design and building of the factory in Gujarat. But these are quite complex factories to build, so our estimates are it'll be 2026 before we can basically start operations at that factory. But we're kind of going full steam ahead. We've got I would say over 50% of the senior level memberships of the team basically recruited, and we're basically working on the design and build at this stage.